Welcome to the South Texas Power Lunch. Matt Duke here. This is episode 5. I'm here with Sebastian Garzon. We're here at Alamo Angels, the Velocity facility here. We're going to talk a lot more about that. But this is an exciting day to talk about our startup community and funding sources and all the amazing things that these organizations are doing in the life sciences. Sebastian, thanks for coming on this with us, man. We really appreciate it. I know we've been talking about this a while, but it's great to have you.
Well, Matt, I am happy to be here, and I appreciate you inviting me and being kind enough to think that I'm a good host or a good guest for your show.
Being kind enough. Wait till you hear what he has to say. He's got more information than I could ever have hope to put into my mind. This whole episode, we want to talk about funding because that is the number one issue that founders hit, and it hits them like a wall.
Yep.
People have great ideas. I mean, the amount of great ideas in humanity is just everywhere, but a great idea dies if it can't be put into action, and you can't put it in action, unfortunately, unless you have money.
Absolutely.
And some people are blessed to have their own. I'm not. Many are not. And so it really takes that whole funding round to get it up and moving. Tell us a little bit from your experience, and we're going to get into more about what you do, but let's just start off with funding. What are the typical life cycles that you see from a funding in our community here? We've got, typically you have the friends and family, angels, venture capital, private equity, public offering. But how do you see it? I mean, how do you kind of think about funding rounds for startup companies?
You know, there is what you've just described is typically how it goes, right? And I always start by telling people there's the first step is the 3 Fs.
Okay.
And so most people will say, what does that mean? And it's your friends, family, and fools, right? And so that is my third F that I typically add to the first stage of funding. And basically what they are doing there is these are people that are not coming up with an actual company yet. They just have an idea. It's very much conceptual, right? There is a concept stage. And as such, they're going around their own network and asking or sharing that idea and telling people, this is what I like to do. Will you support? And at that point, what you're doing as an investor, quote unquote, is you're basically betting that this person, because you know him or her, is able to take that idea and make it into an actual company. Okay.
I've never heard of the 3 Fs, but the fools thing, that's interesting. I always try to make sure like I'm not the fool, right? but that's an interesting tactic. So once you get through that first stage of the 3 Fs, again, I love that. There's a lot of people that get stuck because some of those friends and families could have been fooled, not calling them fools. But you get really into a higher sophistication level the longer this goes, and it's a really big jump. What do you see out there as far as when people when's the right time to make that jump from the 3 Fs to external funding, be it angels or something like that?
So I'll try to paint a picture as much as I can, a very high level description of how the process looks like. So we'll start with what we call pre-seed. And hopefully I'm not getting too technical, but I like to share this.
Get technical.
That way people know when they go to a meeting with an investor and they tell you pre-seed, seed, Series A, Series B, then you'll know what I'm talking about.
Right.
Very first step, pre-seed. And within that stage, there's typically those players, which are the 3 Fs, right? Your friends, your family, fools. And then we have seed stage of development. At that point, then you have different players, and that's typically when you have these angel investors, okay? And then from that point on, you'll go into the different series. Right. And the main difference, conceptually speaking, between one series and the other is the company has done some progress, and they've grown to the level that they now seek additional funding, and the higher amounts, then the higher the series. That's typically what it is, right? Yep. So to summarize, pre-seed, seed, series, and then they go into something like an IPO typically, or some sort of exit.
Right, perfect. And I guess two things for that is in anything, the language is important. There's a lot of times, that people, communication is language, right? And so the language that you just brought out, and please keep being as technical as you can, because those that are listening need to understand these are the language of what the investment community is looking like. The second part of this, and a question for you, and again, we're just jumping right in on this one. Typically, we got a lot of soft and warm and fuzzies. We're going to get to those. But just all your knowledge, I want to get it out in 45 minutes. But we've had a couple of conversations, and some people that have been on this podcast, again, episode 5, but we've had a couple of conversations, is what is the value of each of those rounds typically from a pre-seed to a seed, and then to a series? What do you see as those typical value ranges?
That's a really good question. Typically, pre-seed, most companies will be raising anywhere between thousands, a few $1,000 to maybe $500,000.
Okay.
That is typically a good range for the pre-seed stage.
Okay.
Once you get into seed stage, is more like anywhere between $500,000 to $3-4 million. Okay. And then from that point on, Series A, B, C, etc., then it'll be in the millions. And so the numbers will go up as you go up within the series.
Great.
Why is that important? Because I guess that takes me back to one of the previous questions, which is kind of there is what I call the valley of death in between typically the pre-seed and the seed.
Right.
What happens is, yes, you're going to go after your friends, you're going to go after your family, but let's say that you're raising $400,000. Okay. You may be able to have gathered them up to maybe 300,000, right? But then what happens with the other 100,000 that you're looking for? And so at that point, it may be that you are not able to get everything that you were seeking from those 3 Fs.
Right.
And yet you are not ready to go into an angel investor, for example.
The valley of death.
So that's typically when we encounter the valley of death when it comes to funding. How do we solve that? How
do we get out of the valley of the death? Because I'm sure there's a lot of bones in that valley that never make it out. How do you get out?
That's perhaps one of the most difficult questions that I have to answer when I get founders that come to me and say, well, you're talking about the 3 Fs, you're talking about family and friends, but guess what? None of my family or friends have the type of money that I need to take this to that level. Right. And yet you're telling me as an angel investor, I need to be at a different stage where typically you'll be raising anywhere between 500,000 to 3 million, but I'm not there yet either. So how do I get out of it? There is ways in which you can do that. And I'll share just a couple of ideas. One could be, for example, I know that we've got great universities here in town, and a lot of them actually do competitions, business plan competitions. Make it a point to take advantage of that. If you are someone that is watching or listening to this and you're a student, make sure to sign up to those competitions, because guess what? They do have prizes. And those are
some of them are $100,000.
Some of them, recently, and this is not affiliated with a university, but here in San Antonio, there is an organization called Tech Block.
Right.
And they have an annual event called Tech Fuel. You and I actually attended that one. And on that one, they had $100,000 in prize for the winner. And so, those are numbers that will help you get closer to your goal of getting to that next stage. So that's one idea. Another idea could potentially be, depending on the line of business where you are, grants. Okay. And so particularly, you've mentioned we are sitting today at the VelocityTX Innovation Center. In here, we help early stage companies within the life sciences. Right. And so when you're working on life sciences companies, health IT, medical devices, biotechnology, a lot of times you get those funds from grant applications, whether it's an SBIR, STTR type of grant, Department of Defense. Those are the type of organizations that will typically provide the funding for whatever you're trying to come up with. So yes, there is other ways in which you can get and go through that valley. That don't necessarily mean that you have to go through directly to an investor. And by the way, as an angel investor, when we see companies talking about life sciences that have already gotten non-dilutive funding, which is those grants, right? You don't have to pay them back. That's what I mean by the non-dilutive. It's typically a really good sign. Okay. I like to know that they are hustling. I like to know that they are trying to get funding from different places, and particularly those that are not going to cost them anything. Right. And so when I come in and I write them a check, I know that they were smart enough to get non-dilutive funding prior to coming or approaching an investor. Right. So that was going to be one of my follow-up questions was at an early stage, and kind of maybe we can shift just a little bit to this, is equity is everything. Yeah. Right. I've had experience with clients myself that, they gave away the farm right at the beginning as far as, well, I sold 80% of my stock and I got that $100,000. And, so
and then when they get a little bit further down the line, they realize, well, I've got really not much more to sell. You know, you watch Shark Tank, right? And they walk in saying, hey, Mark Cuban, we're going to give you 10% for a $200,000, dollars. Here, Mark walks away with 60% control of the company, essentially, usually some sort of debt on it. And the guy walks away with, okay, I've got Mark Cuban, but there's my investor.
You know, even in Shark Tank, sometimes you see those episodes where they come and they say, this is what we're offering.
Right.
And as they dig deeper into what the company situation actually looks like, they realize that those people pitching that day are not even the majority stockholders.
That's right.
And they typically will walk away without anything because, you know, who am I speaking with?
Exactly right. Exactly right. So it's good to know about those non-dilutive where we're not having to give equity away. Some of those competitions, most of those competitions, I believe, are grants. Yeah. Some of them, just so you're aware, may have some sort of safe note or convertible note. You should always be aware of what you're going for on the prize. But those grants are typically grants because as a society, we're trying to bolster innovation, specifically in the life sciences as well. Let me bring up another, just one for the listeners that you didn't mention, but I also see a lot of is customer funding. I've got a lot, especially on the tech side, wouldn't really be on the life sciences side, but on the tech side, where they're able to build something, use the 3 Fs essentially to get to a point where they can get that first major contract. And once they get that first major contract, that becomes a revenue source for them that allows them to reinvest back in to the company. Some of the other alternatives that are out there for people are potentially joint venturing. Sometimes an idea can only get so far, and you can look to someone else in the industry that can essentially partner with you in a joint venture, not necessarily just selling, raising funds from them, to then combine that together to actually get something to a marketplace, for this. So there's a lot of ways potentially to get out of the valley of death, but so many people and so many companies, unfortunately, don't make it out.
And one comment that I typically make, and when I make it, people are surprised. Because they're like, why will you say that? Aren't you an angel investor? Aren't you managing a group of angel investors? And my comment is, not every company needs to go through this process. Right. You can bootstrap. Coming back to the whole talking about tactical, not tactical. What did I just say before? The terminology that I'm sharing. Technical. Yes. Thank you. You could bootstrap your business.
Right. And for the listeners, bootstrap means I'm going to self-fund it, right? I'm going to figure out how to do it on my own. The side hustle, essentially, you got a main hustle that's paying for your side hustle typically.
Yeah. And so with that, what that means is, well, maybe the growth process will not be as accelerated. Right. Because you are going to have to wait a little longer until you get those revenues and you get the funding coming in from your own customers. But you can still grow through bootstrap. And what I was saying is people get surprised because I typically tell them, based on what I'm hearing from you, I don't think you need to go through an angel investment group. I don't think you need to seek any other investors. Just continue bootstrapping. Right. It all depends on the businesses, right? When we look at investment opportunities to the eyes of an angel investor, you're looking for scalable businesses. Right. And there is typically always a need for an exit strategy. As an investor, the only way that I can make my money back is if there is an exit some way down the road. Right. But I get with businesses that they have no desire on selling their company or getting acquired or ringing the bell in New York, right? They just want to have what I call, or what we call in the industry, a lifestyle business, just a good business where you can make a decent living and you can provide and you can hire employees, but don't necessarily ever scale it to the point that you're going to have an exit. And for those type of businesses, maybe seeking that type of funding is not something that you should be looking into.
No, that's a good point too. I mean, because there are a lot of great business ideas that are, not scalable, but they can potentially or will generate positive cash flow, which can be a great investment for somebody. The organizations we're going to be talking about here in a second, that's really not what they're looking for. They're looking for high growth opportunities to be able to take, get outsized reward for what could be a pretty hefty risk that they're taking. So I think this sets the stage for the rest of this conversation, because I really want to talk about Velocity, the Texas Research and Technology Foundation, and specifically Alamo Angels in that. Can you give us just a quick little synopsis of the TRTF, Velocity, Alamo Angels, how that structure works? Because you and I have spoken many times, and living here, growing up here, being a lawyer, interacting, I didn't even realize the amazing things that are going on here on the east side of town. So can you give us that quick little synopsis?
Absolutely. So TRTF, when we talk about TRTF, this is the Texas Research and Technology Foundation. That is our parent company. Okay, so that is, you can think of it as an umbrella. Right. Underneath that umbrella, there is different subsidiaries or different lines of businesses that belong to the same family.
Okay.
And so that will include the VelocityTX Innovation Center. At Velocity, what we do is we provide support to early stage companies within the life sciences. Okay. And we have different programs and services that we offer to help them grow and succeed. And then Alamo Angels is now another part of those family of businesses. And what we do is we provide access to capital to entrepreneurs. Now, difference between those two, and we are sister organizations. So the TRTF is our parent entity. We have Velocity Texas and we have Alamo Angels. Sister organizations, we cooperate a lot, but we are still separate.
Sure.
And so Velocity is providing support to early stage companies within the life sciences. Alamo Angels, we provide funding, but we do not have an industry focus.
Right.
So we invest on companies regardless of the industry where they are coming from.
Right. And again, I think that the vision of the TRTF and what y'all are doing around Velocity, which is innovation, incubators, really trying to move up San Antonio's rich infrastructure and talent that's here. You've got Geekdom doing that on the other side from a technology standpoint, really in the SaaS space, but technology enabled. And really then the Alamo Angels is something that is needed because there are other great VC firms here that are looking at companies on the other side of the valley.
Yep.
Right. And I would say not just on the other side of the valley, but several steps outside of that valley. And those that can get out of that valley or not go in that valley are typically looking for angel investors at that time to really get them to that next level where VC is funding. So tell us a little bit about Alamo Angels and what it does as the angel network for our community.
A little bit of history about Alamo Angels. We are a fairly new group of angel investors. We actually got established in 2016 under the name of the San Antonio Angel Network.
Okay.
2018 comes around and we rebranded ourselves to what we know today as Alamo Angels. We launched our first fund and invested the bulk of our investments actually really ended up happening in 2018. We have a few prior to that, but the bulk of them was 2018. We got established in December 2016. So I almost think of it as really 2017, right? but that's kind of how it goes. And then July of 2020, last year, we ended up integrating into the family of businesses of TRTF.
Okay.
And I always highlight that, and I love it because as the executive director for the organization, what that does is it lets me focus on what's really important, which is attracting high quality companies for our investors. Right. As well as providing access to capital to those companies that come and pitch our network. Talk about marketing, talk about accounting. Those are shared services that I now have because I belong to the family of businesses of TRTF. If it was not because of it, if I was still a standalone entity, then it would be a lot more hard for me to get some of these things and really focus on what's important again. Bringing those good quality companies as well as really making it a point to provide them access to capital.
That's great.
The reason they're coming.
We need, having somebody that can focus on that high value work. There's a lot of good people that can do the legal accounting behind the scenes. One here is the same. I can do it behind the scenes, but having you out there doing that is critical. So that's a great enabler for you. Talk a little bit about how, I guess I want to go a little bit deeper into the Alamo Angels, which is how does somebody, if they are an investor, how do they qualify to be a part of the Alamo Angels? Because some people may not realize, they may say, hey, you know what? I got some extra cash. I'm tired of playing the stock market. I'm done with crypto. Nobody's saying that was in crypto, they're done with crypto. It's the people that weren't in crypto that still aren't in crypto, myself included. But how do they qualify to even be an angel before we get to how they get into the Alamo Angels?
So this is not just for Alamo Angels, but for most other angel networks across the United States. In order for you to be part of one of these networks, you most likely will have to be an accredited investor.
Okay.
And this is defined by the Securities and Exchange Commission. And basically what that means is you must be an individual whose annual income is at least $200,000 or $300,000 if you're filing your taxes with your spouse. And this needs to be met for 2 consecutive years.
Right.
Okay. Or you must be someone whose net worth is at least $1 million.
Right.
Besides your primary residence.
Right.
Generally speaking, we're talking about high net worth individuals.
Right.
And people that have the resources to invest on these early stage companies. Now, recently, and that what I've just described has been the case for years.
Right.
And there has been a lot of criticism to that type of criteria, because what that means is, you know, if I don't meet that criteria, I'm not able to invest on this asset class. And some people actually want to do it.
Right.
And so the SEC basically says, we want to protect you.
Right.
Right. We want, because what happens is this is a high return, but very high risk asset class. We don't want you to be gambling your money, right? Out of 10 deals, by the way, if you make 10 investments if you make 10 angel investments, then most likely, depending on who you speak with, but what I've seen is the industry shows that you are most likely going to lose your money on 7 of those deals. Right. There will be 2 that will potentially give you your money back, but then there will be this one that will not only make you a return, but also compensate for everything that you've lost on the other 7. And so that's what the SEC is trying to prevent. They want for people that are sophisticated enough and that have the resources to be able to invest without basically risking their life's savings type of thing.
Well, and people don't realize this as well as, you know, most I would say 95% of all investors, when they hear about investment, they think about, you know, public stock exchange. Yeah. And on those, you get to see your ticker and you say it goes up, down, up, down. With what we're talking about, whether it's angel or VC, it's the one way you're investing that you know you'll lose money, but in order to play it correctly, you have to deploy that money and diversify it as opposed to just pick one stock.
Absolutely.
Right. Which a lot of people, you know, they own Apple or Amazon or Disney. They diversify a little bit, but here you would basically be picking Apple, Amazon, Disney, Costco, McDonald's, knowing that over half of them won't be there when you go to get your money out. And some people just don't realize that. They think that you know, this is something that's sexy and that's where these people make all the money. Well, they're putting the risk out. And so, you know, whether it's angels, which that's the ratio that I've heard, VC, that ratio changes to where you have more moderate returns because they've already been vetted essentially. Could they get to VC money? But you're still always just kind of nurturing that unicorn or that high payoff. And there's still some dying every single chance that you go, which is just different than the way people are looking at stock being up and down and up and down. There's always something left at the end. There may not be something
and
left.
You can keep track of it, right?
Yeah.
You go into your phone and you keep track of how your stocks are doing.
That's right.
With this is one of those deals that, you know, how's that company doing? I don't really know type of thing. And so
they seem to be doing really well. You know, there's a lot more qualitative and different quantitative sets that
and by the way, there is not an actual law per se that will require these companies to provide you with reports.
Correct.
Like in the stock market, right? These publicly traded companies, they have to submit reports every so often. That is not the case on these early stage companies. And so whether you know what's going on with the company or not is highly dependent upon the team and how well they communicate with their investors. But before we move on from this topic, I want to say that though that criteria has recently changed a little bit and is perceived very positively, because now people that are sophisticated in terms of knowledge, in terms of knowing what it means investing on this type of asset class, they are now able to participate. Right. And so that is typically people that have these certifications, and I don't quote me on the numbers, but I think it's the Series 6, the Series 60 something, and the 70 something. Right. So, but these are primarily professionals within the financial industry. Right.
Which I'm glad you bring this up, so that way I'm not practicing law by giving that. But you're right. They soften that standard, which opinion here, you know, the 200, 300 threshold hasn't moved. And I want to say it hasn't moved for a decade,
years,
maybe more.
Yeah.
Right. Whereas, you know, now 200K, that, that is a big number, but somebody that's been knowledge and experience moving through that captures most of the fact that they left that threshold so low, because 200 to 300K is not a high net worth individual. $1 million in assets, that's not including your residence, I would argue still is. But with inflation and just, over the last 10 years, naturally, now we got high inflation, right? Everything's going to be more expensive. So I thought they were already just leaving that number there to try to deal with that. But then you also have people like some retirees that maybe don't have that current income. So it's an interesting standard. It is a very soft standard. Some of those certifications are used, for that. But again, people just need to understand these asset classes are highly risky. And you bring up a good point too. I represent investors, particularly right now, a lot of physicians that are investing into life science deals, other things that are out there. That's one of the key things I always explain to them is, how are you going to have control? Which the answer is usually you don't, but we always check. How are you going to get out? Which in most circumstances you can't. And then we get to that third bucket is, how do you know what's going on? Because if you can't control and you can't get out, then at least you can know. Yep. And most of that stuff is by contract, either by your investor rights agreements, the documents that go into your investment, or the formation documents that will gather what are your rights and obligations. And I've got clients too that say, hey, I invested in this business. I have no idea what's going on. And we send a demand letter. And the good news is, because a lot of these things are tied up, you can get some of that information, but sometimes people just disappear. So for those, just make sure you're looking at that type of information when you're going in, because you bring up an excellent point. It's not like the stock market where I can just read on the news, how are they doing, or listen to an earnings call. You don't typically get that unless they're required to.
And Matt, you brought up the legal aspect of it all, right? There's contracts, there's things that could potentially help you get that type of information. But what I will say is, and I don't know if I'm skipping or getting ahead of myself here, but
you keep going.
When we look at investment opportunities as angel investors, one of the top, if not the number one thing that we look for is the team.
Correct.
And I typically say we invest on the jockey and not the horse.
Right.
And with that, what I mean is coming back to the whole 3 Fs. Mm-hmm. When you first started and you got your first initial funding, it's because of you. It's not because of the idea, because you had nothing at that point, right? Mm-hmm. It's because they thought that you, as Matt, I know the background that you've got, I know the level of education, and I know that you've been able to accomplish. So now that I know that this is the type of person and your profile, once you come up with a new venture, I'm going to bet that these guys got what it takes, right? But then most importantly, I want to know that as an angel investor, that the team that they've got in place is a team that can be a good steward of my investment. And so with that, knowing that it's a very risky asset, knowing that there is not an actual requirement for them to keep communication with you, or why not, we really pay attention to the team. Right? What type of experience do they have? Are they able to articulate what they want? Do they communicate well enough? Are they part of the due diligence process? Is talking to other investors? Are they actually giving you reports? What's going on? How do they communicate with you? How do you keep up with them? Are they accessible? Do they pick up the phone when you text, when you call? Mm-hmm. Those type of things become super important when it comes to investing.
Well, and I'm glad you bring that up. And you did a great transition. Let's talk about, if someone is looking they've gotten out of the 3 Fs, and they didn't really have any fools there. It was a good deal, right? But now they need to bring this to an angel for pre-seed. Mm-hmm. What are some of the other things? Team is important, because an investor is looking at great idea. I see the vision of where it could be at the end, but then they still have to have the team. And I've been in the room for times where great idea, great vision, a lot of belief in the founder. But then when it comes to taking that concept, a lot in life sciences, how are they going to operationalize that? Yeah. There's not an expert with regard to manufacturing, finance, marketing, all those key factors that will take them from going from that idea stage to the next level. Give some more tips as to what a founder needs to be thinking about as they go and talk to an angel to make sure they're prepared for the type of information they're looking for.
Most investors are looking at the team. But most importantly, particularly with technology companies or life sciences companies, you'll know that most of the ideas come in the life sciences from the scientists. Mm-hmm. in the technology arena from the coder or from someone that is very technical, right? So generally speaking, and one of the biggest issues that companies face is that they don't have a balanced team. Sometimes because you're scientists, of course, they are extremely smart people, but they've got their own strengths and weaknesses. And 9 out of 10 times, they are not the right person to have the CEO role. And so sometimes you see companies that great idea, great concept, the technical aspect of it all is great, but they are lacking that balance. So they need to bring forward someone that knows how to take that idea and that concept to the next level and scale it. And so balanced team, someone that is business savvy and the technical aspect of it, it's super important. That's one thing that we definitely look for. Something else that we look for is traction. And so, yes, there may be some investors that come in very early stage in the game, but the more I've seen it and the more experience I've gotten from these industries, angel investors are actually pretty risk averse.
Right.
And with that, they want to see that there is some sort of validation, right?
Which is funny, but I agree with you, because we just talked about how they're going to lose money, but they do go into every single investment risk averse.
Correct.
But in the back of the mind, they know even as risk averse as they're going to be, there's just uncontrollable factors where they are in that life cycle that it's going to cause some of those to just not make it. But that's a smart distinction there. I'm glad you brought that up.
So as an investor, you want to make sure that there is some sort of traction. Okay. So going back to our example of SBIR, for example, or the grants as a life science company, if you've already gotten something like that, it's because you applied for the grant, which are, by the way, very competitive, and you got them. And so that validates the fact that you guys are actually working on something of value. Right. Most of these grants, if it's an SBIR, STTR, are coming from governmental agencies, the Air Force.
And they're validating the fact that they will give you that grant, that you meet these sort of criteria. So yeah, absolutely.
If it's a technology company, for example, you've already got an MVP. Talking about bootstrapping, you've already got a minimum viable product. Most likely you already have early customer feedback as well as monthly recurring revenues. And there is no better to validate anything than showing people that you're able to sell it.
Let me pause you right there, because I can't tell you how many times I talk with potential clients or just people that say, I've got this idea, I'm going to go raise $3 million. We're talking about $500,000 to $3 million. That's the bucket we're in. And the MVP already exists. If we don't have a concept, we've got an MVP there. And so some people, I think, skip that and just think, well, I've got this great idea, I'm gonna go find myself an angel and go. That is not typically. You have validation somehow, either through a product that I can touch or a grant, all these great feedback there just help people understand where the right range is for them.
Absolutely. So we always look for that type of traction. And if it's financial, even better. So the team, traction, and obviously we want to make sure that this has got a big enough market so that we can actually make a return on our investment. And so the scalability aspect of the company is super important. And then last but not least, talking about how do I make my money back, there's got to be some sort of exit. And so typically there is usually 3 paths. Either you go and ring the bell in New York, like I said before, and you do an IPO, or you could potentially also get bought back. So the founder will buy back its position and buy the shares that were issued to the investors. That doesn't necessarily happen too often. And the one that I've seen happening a lot more is through mergers and acquisitions, particularly acquisitions. So it could be a bigger fish, a bigger part of your competition that they saw what you've created, they thought it was of value, and they bought that company. So that's typically how you make your money back as an investor.
Well, and I've had a couple of people I've been engaged with that have really fallen to the whole of a founder or a company really playing up the IPO issue. And we've had a lot through these SPACs, special purpose acquisition companies. So we had a lot of companies that were going public. We've had a couple of public companies here in San Antonio, which has been great. Task Us, Black Rifle Coffee. It looks like they're going to be, looks like they're going to be, getting listed and going public soon, which is great. But people need to realize that the IPO of all viable companies. So we've already gotten through those at the angel level we've invested in that have gone away. We've gotten to the moderate ones. We're looking at those ones that are really good returns. I read that still only 2% of those exit through an IPO.
Yeah.
And when they do, I mean, this community's had KCI and, you know, they went public, private, public. So we've had a lot of experience in this community, which is great, but these really are rare and they are called unicorns in most circumstances because they're rare. Most of what you see is acquisition or some sort of roll up acquisition into a larger platform that's going out there. And this is a great returns.
Still.
And this is a market that in order to be in that market and get those returns, you have to be taking that sort of risk.
Yep.
So we've got team, traction, scalability, and exit. Anything else that from a founder standpoint, if I'm coming in and going to talk to angels about money, what are any other key things I should be thinking about I need to deliver to them, have prepared? Talk about the process for being able to pitch to some angel investors.
So a couple of things. Number one, and I am very particular about this one, humans tend to be very visual. And so when you submit a pitch deck or when you do a presentation, make sure that it looks nice, right? It's not just you putting on a suit,
right,
or a nice dress, right? Your presentation, it's also supposed to look nice and it should be graphically appealing.
Right.
And a lot of people don't necessarily pay much attention to it. Obviously, I agree, content is going to be king. But the graphical appeal, believe me, is going to take you a long way. So that's one. Another one is be prepared. Make sure that you follow up. You know, if you meet an investor today, and it could be, by the way, you could be sharing the same elevator with an investor one of these days. And so always be ready to pitch. That's my other advice. And so there is one thing that we all call the elevator pitch, and we know of that, and there is an actual story behind that, and is yes. People actually used to take an elevator in places where there were business people that organically they could meet and then just pitch them that idea. But the elevator does not take too long, right? 30 seconds.
Say, it was 100 floors back then, and that could have gotten you, probably 5-6 minutes. Now so the 100 floors gives you 30 seconds.
Yeah. So with that, you've got 30 seconds to tell people who you are, what you do, and why should you invest on me. So always be ready to pitch. Okay. And then the last one, be very organized. I think that will be a good reflection of who you are and how you will handle things. For example, once you get to the point where people are actually considering to make an investment on your company, there's typically what we call a data room. And so I've seen people that don't necessarily have anything. It's kind of like if you have a guest in your house, you better make sure that you're cleaning it, that it smells good, that you've washed your dishes, and that it's ready for those guests to come in and have a good experience.
And to take that analogy, though, these are the type of guests that are going to open the closets and they're going to maybe open some of those counters. So you can't make it look all nice and flashy, but then shove the dirty laundry into the dishwasher, because they're going to open the dishwasher and say, why is the laundry in the dishwasher and the dishes in the laundry room? So, but that's a great analogy. They've got to get the house in order.
Be organized, and people will notice.
Right.
I notice it when I get companies or founders that have everything, to the point that it's supposed to look like, and I then know this is a good indication of the type of investments that I'm making. I think that's typically a good sign. So to summarize, make sure that you are also doing that graphical. There's got to be a graphical appeal to your pitch. Always be ready to pitch. It could be a coffee shop, an elevator, anywhere. And then also be organized, follow up, and be a little bit more diligent when it comes to really having everything in place.
And what boggled my mind was that there really is a formula. It's a loose formula for pitches and pitch decks. And it's been a very eye-opening experience for me as I've worked with founders and done some other things on the outside as well, to see that process of a pitch deck can actually really, really benefit your organization with regard to clarity, organization, vision, all sorts of stuff. But I've also seen a whole lot of people not go through that process. And it really does shine. I mean, it's not just as easy as, get somebody to do a graphical design to it. It's you take the time to get your vision very narrow, specific, well-defined, but it's something that you can tell the difference when you see enough of these. And these angel investors, they see a lot. Remind me, you can tell the viewers too, is when you come in to do a pitch at the Alamo Angels, What's the process to be able to see, hey, is that an opportunity for me? Because you're highly selective. I mean, the amount of applicants you've got, the amount of great ideas that are out there, it's high right now, which is fantastic. What does it take to get to be able to pitch in the Alamo Angels? And then if you are selected, which very few are, but those that are selected, what does that process look like for them?
It's pretty easy, and I think that it is very standard for most angel networks. For us within Alamo Angels, it all starts with an application. Okay. So we will be reviewing two main documents, which is your application and a copy of your pitch deck. Okay. If you want to provide support materials, that's fine, but the two main documents that we'll be looking at are those two. And so we've put a lot of thought and a lot of time and effort into really reorganizing our application so that the questions that we're asking you is in fact what we like to know, and that will make us or help us make a better decision when choosing these companies. And we've also put a lot of processes in place when it comes to the screening and the selection process of these companies. And so with that, you submit an application, which by the way is free. You don't have to pay anything. All you have to lose is the 25 minutes that you spend writing that down. It goes through our filters. The first filter is basically the screening process, and we just want to make sure that the applications that we're looking at are aligned with our investment thesis. Okay. Typically, is this a scalable opportunity? Do they have a good team in place? Those type of things, right? Then from that point on, we provide them with scores. Okay. And for those who are listening here from San Antonio, I'm happy to report we literally provide bonus points to those companies from San Antonio that go through the process.
That's fantastic.
Reason for that, we want to support our entrepreneurial ecosystem. And so, if you are a company from San Antonio, take advantage of that. Now, it's still a competitive process.
Sure.
But we're trying to give you a competitive edge. And then the top scores are the ones that then get transferred to a selection committee. Okay. So everything that I've described so far is more than kind of on the back end, myself, my staff, the chair of the investment of the selection committee. But once we have the top 6 or the top 7, typically anywhere between 6 and 8, we share with the selection committee, the angels themselves, some of the investors. And then they get to choose which are the top 3 that we like to feature for the upcoming cycle. We choose those top 3, then they go through a pitch coaching session. We want to make sure that they are prepared. A lot of times this is not their first rodeo, but we want to provide or add value as much as we can, number one. And number two, there are certain ways in which we like to handle our events within Alamo Angels. So we try to give them some pointers and try to position them for success. And then once they come, very Shark Tank-like, 7-minute pitch, 10-minute Q&A, then we have them step out of the room and we have an internal discussion with all of our members. And I always say this is where the magic happens, because we have such a diverse group that we as a group can evaluate this investment opportunity and come up with a better idea of, is this a good idea? Is this a good opportunity, or maybe not so much? We have attorneys like yourself, we have doctors, we have retired executives. And so that group approach of evaluating this is definitely makes a difference. And we do that with the 3 companies that we feature every month. From there, I say 7-minute pitch, 10-minute Q&A. It's only 17 minutes. Your goal, by the way, when you go and do a pitch, is not to get a check right there and then. Your goal at that point is to generate enough interest to have a follow-up meeting with these people. And so the week after, we do what we call a deep dive session. And that is a 1-hour-long session with the founder and those that heard the pitch and are interested to learn more. And then we go through their closet. Right. And we go through the different things and try to figure out what's really going on with the company. Assuming everything checks the marks, from that point on, we do due diligence. If they told us this is what we're doing, then we got to make sure that it is in fact what they are doing. And if it checks the marks, then we'll write them a check. Very high level overview, of course, but that's more or less how the process
And what's the time frame look like? I mean, no 2 investments, I'm sure, are a lot, but we've got probably about a 6-week time frame to get to, a deep dive, right? And then from the deep dive, which is really where the hard work begins, because now we've got the back and forth and negotiation. What do you typically see is, to get funding? So what's the process for funding?
From pitch day to getting funded is about a month.
Okay.
Like you said, no deal is the same. So there's different deals. I mean, we've gotten deals where the week after they've received an investment.
Right.
But as of right now, we're working on a deal that it's maybe 3 weeks, and it could take, assuming that everything goes as planned, I think it'll be maybe a month and a half or so.
Yeah. Yeah. And people don't realize too, they think all these things are like Shark Tank. So when you hear Shark Tank, you think I'm walking out of here with money or I'm walking out of here with my tail tucked. Yeah. But that's not the way this works at all. And so I really encourage people to go through the process, because even if you don't get a single dollar of funding, every single time you go through this, the feedback you get, it's invaluable.
Absolutely.
I've heard some feedback, from people that, I mean, you would have cost you a lot of money to have an expert tell you what they told you. And now they can go back and solve what somebody saw very quickly as a whole in their strategy or in their service. And now they've gotten that just by time to go, thank you, which is more valuable to them than money at that point.
When we have these founders in the room, we always make it a point to provide all of our investors with a feedback form. Mm-hmm. And the beauty of that is, obviously I cannot share any names, but we've got former executives from Valero. Mm-hmm. We've got people that own multi-million businesses in town. And these are people that you will most likely have a pretty hard time getting in front of and getting to meet them. But once you come through our platform, once you come through Alamo Angels, you now have a bunch of those type of people in the same room. And then we ask them, whether you write them a check or not, at the very least, we want to give them feedback. And so that's what we ask from them. And so while we are providing investment opportunities for those investors, we always put ourselves in the shoes of the founder and always try to help them out with these type of initiatives.
I think you do a great job with that, Sebastian, you and your team. I really do. I appreciate what you do for the Angels as well as for the founders here in this community. I want to get into your journey real quick as an entrepreneur, because I know about it. A lot of people do, but it's a fascinating thing. But before I do, take San Antonio as a community here, where do you think our biggest opportunity is right now as far as for having access to capital for San Antonio companies or companies that want to be in San Antonio? Do you see any low-hanging fruit out there just in your experience with working with the community?
I think for our community, first and foremost, we need to believe it. We need to believe on ourselves, and we need to own it, right? So we are San Antonio and we are special.
Yeah, we are special.
Okay. And a lot of times, unfortunately, we get people that do not believe that is the case and end up going other places because they think they are more special.
Yeah.
And while we are not the most sophisticated city when it comes to venture capital, or this is not perhaps the mecca for innovation or entrepreneurship, we still got a pretty good ecosystem that can support you and get you to the next level. So number one, believe on yourself. Know that San Antonio can still
preach
do
it.
Good
Go
things,
ahead, preach it, man. Yep, I'm with you.
And then in terms of the community itself, I am always a big proponent of a couple of things. Number one, collaboration. And number two, looking into what our strengths are and acknowledging that if we focus on doubling down on those strengths, we probably will get further ahead rapidly. And so with that, I'm looking at San Antonio with a couple of very specific industries that we could potentially take advantage of and get ourselves known around the world if we wanted to, if we double down on those, and that includes life sciences. We have a very strong community within the life sciences, health IT, medical devices, biotechnology. Not many people know it, but it's a reality.
We do.
And then the other one, cybersecurity.
Right.
We got UTSA, we've got the port, we've got different places that are working on cyber and funding that could potentially take us to that next level.
Okay.
So that was number one. And then the other one, coming back to the whole collaboration. In terms of collaboration, I feel like I'm coming from Corpus Christi. I'm not originally from there, but I'm coming from there. And I remember and I know for a fact that when we looked at San Antonio, we always looked at San Antonio as, wow, San Antonio. Kind of like, that's a cool place to be at, right? Yeah. You go down to the valley and they'll be the same. San Antonio, that's a cool place. Laredo, the same thing, right? Pretty much the whole South Texas looks up to San Antonio. Now you go from San Antonio to Austin. You go to Houston, you go to Boston, you go to other places and they'll be like, San Antonio? who are these people?
Exactly.
And so with that, I think we've got a really good opportunity to take more of a regional approach in South Texas. They really look up to us. We are a little bit more sophisticated and a little bit more advanced, and we can certainly help those markets unify and come as a unified front and sell the whole South Texas region, as opposed to just say, I'm San Antonio, I'm Corpus Christi, I am Laredo, I'm the Valley. We all come together, and I'll guarantee that people will pay a lot more attention.
I 100% agree with you. We have a very unique culture, probably one of the most unique cultures in the entire country.
Yep.
It's very well protected, and it's very special. And with all of the strengths that we have that we sometimes forget because we don't have some of the sexiness of other communities here in this great state. We start to think, and others start to think, well, that's not right for me. But actually, in reality, over the longer term, this is the steady ship that's going to be able to do more than, what's going on. I mean, we see now in California, the light and shininess of California has started to dull, and now people are moving their feet. Stability over the long run, I think, will continue to serve us. I wanted to shift in to your entrepreneurial, the Passport to Fluency. Tell us that elevator pitch. What is Passport to Fluency and what you do with that platform that you have?
So in Passport to Fluency, we create opportunities for people to increase their fluency in Spanish specifically by providing them with immersive environments where they can practice or learn the language. That's basically what we do. In case you guys are wondering, I'm actually originally from Colombia, reason for which the accent comes out. I know you probably
didn't
thought
notice
that I was
the
Texan.
accent. Didn't notice the accent at all.
But that's where I'm coming from. I was born and raised in Colombia. And I'll tell you, in Colombia and in most South America, there's two primary subjects, at least when I was going to school, that you had to take every single day. That was English and that was math. Every single day I took 2 hours of English classes.
Wow.
Okay. By the time that I graduated, I understood the language. Okay. I understood when I read some, but I couldn't speak it back. Does that sound familiar to South Texas, right?
Yes.
Here in South Texas, you get a lot of people that understand Spanish,
right?
But they are not able to have a conversation. They cannot speak it back. The fluency aspect of it, it's a little bit more handicapped. And so when I got here to the US, specifically to South Texas, I realized that that was the case, right? There's a lot of people that, whether they know it or not, they know the language. They just need a little push in order to start speaking it. And that's how Passport to Fluency got started. And by the way, I skipped a part, which is in order for me to have the fluency level that I have right now, the only way for me to actually get there was to actually be immersed into the language, the environment, the culture as an exchange student after I graduated high school. And so those are the type of opportunities that I am trying to create. And so far, there's a couple of things or three main things that I am doing. Number one, for those in San Antonio, we are hosting Spanish nights once a month. It's more of a community approach to get people to connect to each other, to create a safe environment where you can practice the language. And I always make sure to invite native speakers because it doesn't make sense for you to practice with someone that is also trying to learn. And so we always have people from different countries who speak the language and are able to practice it with you. We typically have one activity per night, but it's very informal. It's more like, let's hang out, let's get together, let's create a community of people that want to learn. Now, when it comes to getting more serious about learning the language, we've created our own curriculum, and we actually have virtual coaches in Colombia. I mentioned I am from Colombia, and that is one of the reasons for which I have them there. But if you do your research and if you're serious about learning Spanish, you will quickly find that Colombia, particularly Bogota, the capital where I'm from, is very well known across the South America for being one of the best places to learn the language.
Wow.
We speak it very clearly. We don't use as much slang. Our speed, it's a lot more aligned with the type of speed that you need when you're learning. And so we've gained that recognition, and that's why I wanted to take advantage of it. So I've got virtual coaches down in Colombia. If you sign up, you meet with them. Most people meet with them twice a week, and they go through our virtual platform where they go through the curriculum, and it's very conversational. When you learn a language, you are typically looking at grammar, you're looking at writing, listening, and speaking. We dropped the first two, grammar and writing. We don't do anything.
Thank goodness.
We just do listening.
That was
and
the hard
speaking.
part I had of 5 years of Spanish was that grammar.
Yeah. And that's what happens. I come across these people all
Right.
the time. Oh yeah, I took Spanish classes when I was in school. What do you learn? Not much. You know what? Forget about it. We're going to get you to speak the language. Now, if you want to make a career out of this, if you're really, obviously grammar and writing is going to be a lot more important. But if what you're looking for is to be able to communicate with other people, this is the right place to go.
Because I growing up here, I mean, I think I have 5, maybe 6 years of Spanish. If I see it in writing, I can very slowly figure out through context of enough that I know. If someone's speaking to me slowly, I can somewhat get what the conversation is. But really all someone like me needs is the ability to communicate with, a big chunk of my community that, is Spanish speaking, and don't quite have that comfort to do that. So we don't need, for people like me, I don't need the grammar. I don't need that. I need to be able to communicate. And communication, again, as we talked about, the language is critical to be able to communicate and define value for people.
And the beauty of this all is you've described the perfect profile of the type of participant that we are looking for, which is someone that is not starting from scratch. That's why we don't do the grammar or the writing. We're looking for someone that has got the basics and just needs that little push to be able to speak it.
Right.
That's basically what we look for.
Well, and if you've grown up in San Antonio, that's a big chunk of us because, it's part of the curriculum that we take. I'd love to have you come back on and talk more about that because your journey of that we've talked about before is fascinating, but we're running out of time. There's one thing that I ask every single entrepreneur because I'm always fascinated by it. Give us a story if you want to. If you don't, you can pass. Of either where it looked like this was not going to make it. You thought maybe you're in the valley of death. Now I'm going to use that. So now every time I say it, I'm going to give you credit for it. You thought you're in the valley of death, or this was that moment where you're in a valley and then something happens that either you pivot or something changes to get out and there's some resiliency. People always want to hear about, how you've overcome some sort of obstacle. Do you have any of those stories you can share?
It actually happened with Passport to Fluency. Okay. And it's something that happened not only to my business, but to most businesses because of the pandemic. The pandemic hits, you are used to doing things a certain way, and then all of a sudden you cannot have that social aspect. So you have to figure something out real quick.
Right.
And so what we've done was we actually had a pretty strong community down in Corpus Christi. We were meeting every so often. It was great. We had those Spanish nights. We were actually planning trips because that's the last part of the whole business model. In order for you to get immersed into it, yes, taking the classes is great. Yes, doing it with native speakers is great. Getting together with people once a month within your own community is great. But how about you get immersed into the language, the environment, the culture? That's really the differentiator there. We could not do any of that, right? And so we had to quickly shift into a new business model, and we ended up creating the curriculum that we will be doing now through the virtual coaches in Colombia. So that's how we came up with the whole idea.
Wow, okay.
And so from there, we basically gave away, we chose, I think it was 12 people that were part of the pilot program, and we developed the curriculum as these students were going through it.
Right.
And so we developed the first 2 or 3 modules. And then from that point on, we had the most advanced student was the one that was pushing us to continue developing it. And so far we've completed a year's worth long curriculum, which is typically what it takes for our programs anyway. But it was not because, if it was not because of this situation, we probably would have not gotten to that point at the pace that we did. And so I think that was definitely one of those stories that I can give credit to situations that are at the moment not the most ideal situations, but at the end of the day, they help us grow and succeed, and it taught us a lesson too.
No, that's great. I mean, COVID did force people to innovate, right? Or die. Their company. And so there's going to be even more of these stories I think we hear, which is fascinating, right? Where when choice with these really tough, impossible situation, I mean, what do? You cannot change the world. It was where it was. How do you innovate to overcome? So congratulations from that. I mean, and it's probably something I'm sure that you're going to look back and even do today to say that moment of hardship and looking at, potentially the end of it actually became what actually started everything in a direction that was so beneficial for us. Well, Sebastian, I can't thank you enough for coming onto this, for hosting us here at your facility here on the East Side, for talking through us with everything. Is there anything that you would think of, like, is there anything we're missing, like the last little key? What should an investor, like if you were going to be starting up, let's go to the student. A student trying to start up today, what would be the number one wisdom you would give them as a student trying to start up today in the environment we have in our community? San Antonio wants to be here in San Antonio. What's that one key wisdom? Or if you've got more than one, that's great.
There's one thing that impacted me when I first got to San Antonio, coming from being born and raised in a community in Colombia where people are very giving and always looking to go above and beyond when you approach them. I did not encounter that in other places that I've lived in the US. I was down in Corpus Christi. I lived sometime in West Virginia when I was an exchange student. I live in Orlando, Florida. And it was not until I came to San Antonio that it clicked, that it came back to me, that warmth and that wanting to help type of approach from people. I have not found that anywhere else. That's what makes San Antonio very unique. And people are willing to help. And it's easy for you to get access to people that potentially are way higher up and are a lot more advanced in their careers than you are, but they are not looking down on you. They're actually willing to help. So number one advice, take advantage of that type of culture and environment that we foster in this city to seek out mentors. Get surrounded by people, especially as a young person. You don't know at all whether you think that you do. And so try to get surrounded by people that have done it before. Try to pick their brain, maybe schedule certain reoccurrence in which you meet with these people, invite them to coffee or lunch, or just meet with them at a park or whatever the case may be, and try to pick their brain and try to learn from those that have done it before. That to me is going to take you a long way.
It's a great bit of wisdom there. It's so true about this community, that it really is a community. And big city, 7th or 8th in the country, but the community really is, you're about 1 degree, and it's so the accessibility, you're right, is very rare for here. Sebastian, thank you again. We really appreciate you coming on this episode with us here. If you're listening to us on our audio version, Spotify, Apple, Audible, please click that subscribe button. That way you'll get our automatic podcast. If you're watching us on YouTube, thank you. Hit that subscribe button as well. Just let us know, leave some comments for us as well. We always love to see the feedback, for me, for Sebastian, for any of our past guests. And we'll be back next week. We really appreciate your listening. Thanks.